And good afternoon. Welcome into Market Talk for Wednesday, March 31st, 2021. Good afternoon to you. I'm your host, Jesse Allen. Great to have you here with us. MarketTalkAg.com. That is our home on the web, MarketTalkAg.com. You can also find us on Facebook, Twitter, Instagram. All of our social links are there. All of our great streaming sources, our radio affiliates, everything. One-stop shop on the web, MarketTalkAg.com. Huge day today, a wild Wednesday, to say the least, with those USDA reports that came out. And happy to have our good friend Mike Zuzolo with Global Commodity Analytics joining us here today to talk about it. Mike, good afternoon. And I think today's trade is maybe a makeup for all those down Wednesdays we've had to talk with each other. Man, oh man, what did USDA do today? Holy cow, Mike.
Yeah, I am split in my mindset because I know it was a surprise to see both corn and bean acres lower than the average trade expectation. So I do give on that one that one should have been higher, one should have been lower, given that the prices where we were when producers made these decisions, when USDA did this polling. But Jesse, I tell you, there were three things in the corn acreage category that really made it hard for me to get up to 92 million acres. I came in with my clients and subscribers at 91.9. I don't do the news wires. I don't publish my numbers. I feel like the clients pay for that and the media doesn't. Now you and I can talk about it because you interview me. The other reason I don't do it is because the algorithmic traders really use these pre-estimates and really position themselves aggressively in some cases, and really kind of take away from the potential price action from a USDA surprise. And just before the report numbers came out, we were trading new contract highs in the November bean corn D's corn ratio. In other words, November beans got to 2.66 times higher than the D's corn. That was a new contract high, mainly because of these acreage estimates, I think, and the grain stocks too. So swinging back around the acres, I had a hard time getting above 91.5. I gave clients and subscribers a 91.9 number this past weekend after really crunching the anecdotal evidence from clients. Three things were holding me back. One was the derecho in Iowa and conversations that I had about really good quality seed corn being available in a big amount, a big volume. The second thing was the crop insurance implied volatility. Corn was very high versus the soybeans, and that made the crop insurance price so much more expensive in the corn relative to the soybeans. The third thing, maybe the most important thing probably for me as far as what I could stand on the hardest, was the idea that about a third of my clients probably did not have their inputs, fertilizer, chemicals, energy needs covered for the springtime. And so they had to deal with this sharp price increase of the last 6 or 8 weeks. And I think that really pulled them back to more of a soybean mindset because they could make about the same revenue on beans that they could on corn, and probably do better in terms of net revenue after looking at their cost of production figures. So these three things, I think, went into the mix with what producers were surveyed when it came to corn versus beans. That does nothing to explain the 87 million acres of soybeans compared to an average trade guess of just under 90 million, which that's exactly where I was as well.
Well, we know USDA is known for their surprises in this report. But I mean, I think everyone's scratching their heads at that number you mentioned on soybeans. And just overall, I mean, compared to the pre-report estimates that were out there, we lost a little over 4 million acres out of those estimates. If you look at quarter beans, I mean, it's a head scratcher to me. And I know wheat picked up some acreage, but really overall, scratching my head is probably the only thing I could say after this report, Mike.
Yeah, I know. And I think that one thing I'll point out is, and we can come back around and circle around this if you want, but when I look at USDA's numbers by state, I'm looking at them right now. The top 5 planted states are going to be Iowa, Illinois, Nebraska, Minnesota, and my home state of Kansas. In fact, Kansas is the #1 state this year of principal crop area. It actually beat out Iowa for this year. I think that says a lot. I think the primary grain belt is where we lost acres, and that is very hard to explain given what farmland prices are doing. I'll give you that completely. But I think the other side of that is when I look at the soybeans, when the USDA looks at the soybean top 5 states, in other words, all 4 out of the 5 of those states, I should say, all went down this year compared to last year. When you look at soybeans, all 5 of the top planted states went up. So Illinois, Iowa, Minnesota, North Dakota, and Indiana, top 5 bean states this year, as it stands right now, they all went up. North Dakota went up almost 22%. I put that directly at the feet of the spring wheat price versus the soybean price. So I think in the primary grain belt, we had a rotation to beans, and I think it shows up in the top 5 states, but I think it's the fringe states or the perimeter around the primary corn and bean belt that really has probably more validity in what you're talking about, because you look at cotton acres, you look at spring wheat acres, you look at even sorghum acres. They were up dramatically compared, in some cases, compared to what the trade estimates were. So it seemed as though people in their areas stayed in their lanes. And I'm wondering if that's not a situation of the crop insurance prices. Again, while beans were cheaper than corn, they still both were quite a bit higher than what they normally are. That's the best explanation I can give you right now.
So, looking at everything overall, Mike, if I'm a producer now, looking at all of these numbers coming into the market, obviously limit higher moves today on corn and soybeans, and really strong on wheat. Um, we got a holiday shortened week with Good Friday coming up, but obviously we're going to probably be looking towards tomorrow to see what the trade does again.
Yeah.
We have those expanded limits. What advice do you give to producers here in the short term with all of these numbers, this bullish report being digested by the market?
I think the biggest thing to realize about today's report is that it was still supply driven. You know, you and I've talked about this cost push inflation. We've seen nothing but cost push inflation from where I sit, Jesse, and that goes to the Biden infrastructure bill that's going to be paid for by a corporate tax hike. Supposedly, these are all cost push inflation, supply weather inflation. In other words, is what we're seeing in terms of these prices going higher. I wrote last night to clients and subscribers that the price break that we saw going into the report was actually helping to ease my fears that we were going to ration too much demand, and that the break in prices was actually going to be good for long-term demand. Look at what cattle weights have done. They've dropped by 20 some pounds on a dressed basis in the last 6 weeks. We are rationing demand. There's no question about it. And look at Australia. Australia cannot sell their wine to China. They can't sell their iron ore to China, but I believe their wheat exports are up 300 or 400% from last year at this time, because they got a good crop, and the Chinese are feeding wheat instead of corn, and to a lesser degree some other feed grains like sorghum. So I think it's supply driven. That means we still want to sell rallies, especially if we get planted safely, because and quickly. If we get planted safely, meaning no freeze, and we get planted quickly, meaning no water that delays our planting like 2009, these acreage numbers are going to grow. We have to assume that to be good, effective risk managers. So don't look at the demand side of the equation, because you're going to hear a lot of people talk about the idea that with these acreage numbers, you're going to be closer to a 1 billion bushel carryover in corn and 100 million bushel carryover in beans. That may be for the next 60 days, but the market's function is to not allow those type of stocks to come in and mess with us and do that in terms of bring us down to that low of a carryover level. So make hay while the sun's shining. This is a supply weather-driven rally. Get hedges in place and simply defend those hedges in case there's weather. It's the same old thing that we've talked about, only it's a different day.
Well, and talking weather, it seems like that's going to be the next big conversation that we're going to have. I mean, you look at the Western Corn Belt, the Northwestern Plains, the Dakotas into Montana, Wyoming, Western Nebraska. They're still really dry. I've even talked to some producers in Minnesota and Iowa. I know Iowa's caught some rains, but they even said, we're dry here too. And I think that's going to be a big conversation now that we have these reports out of the way. That's what we're going to be turning our attention to for the next couple of weeks, Mike.
Yeah, I think you have that. I would put it in a 1-2, kind of like a race car situation, where number one pole position will be the April WASDE report, where we balance out these acreage numbers and we get fresh demand numbers from USDA. And more importantly, or just as importantly, we get fresh supply numbers from South America. I am still beating the drum that we don't have the crop in corn and maybe even beans that the trade thinks we do when it comes to South America. Now, if we go higher all the way into the April WASDE report, we may be pricing some of that in. But I think that's number one pole position car. Number two pole position car would be what you just talked about, and that is the weather and how quickly we get planted. And I think that's the differentiation between whether we do more corn or more beans, especially in those states you mentioned. I could see them turning very quickly to canola or soybeans if they have any hint of colder or wetter weather. And some of my private weather forecasters are suggesting we're not going to warm up very quickly in some of these areas that you're talking about. Now, if from essentially Kansas all the way to Ohio, that primary corn and bean belt looks like it's going to be pretty much normal temperatures. And then east of the Mississippi River, especially the Tennessee River Valley and the southern parts of the Ohio River Valley, still excess moisture. Again, that could mean corn acres that go to beans. So I'm really still in the mindset the bean acres are going to be closer to 90 million than they are this 87.6. And so I'm really on the hunt to get up to 100% of insured bushels sold on 2021 beans if I can check that old high.
Well, and of course, farmers time to work off some of these breaks and these rallies. And I talked to a producer today before the report and after the report, a friend of mine, and we look at basis, how strong basis is, and he was looking at 520 cash corn on old crop. He still had some old crop corn, and now he's looking at 545, 550 basis in parts of Iowa. I mean, we look at that, and to me anyway, if I was a producer looking at that and staring at that profitability, man, it's like you said, it would make sense to sell and defend or do something there that would help me out in a positive manner.
Yeah, I was talking to an elevator client today in northwestern Ohio, and I had just talked to a new client from north of here that came down and sat down with me a couple days ago. And I think what you heard, I think really needs to be thought about, because the new client told me he still had half of his old crop corn left. And I said, why so much? And he said, I really think with these tight of stocks, they got to kill this crop twice, but I will let go of it if it goes back up again. And I think he will. And so I think you do have some old crop corn that is going to come out, and that helps support the idea of what you said. And the elevator client I spoke with had been in contact with some of the ethanol people that he feeds in that part of the country. And they said, we've been improving our basis as the corn price has been going down to try and encourage getting some hard sales made by producers in our area. But he said after the report and that limit up move, they're not going to try and chase this because they think they're going to get bushels on their own just by the market function. So I do think that the domestic farmer will push a lot of old crop corn and beans out, and be pretty much cleaned out by the time they get done planting of this year. And so we will have to watch that in the back end if we have a weather event, because all of a sudden the farmer is out. And if we'd have a weather event, the market would be in a real rationing mindset. That's why I want to keep that defense mechanism in place through the summertime. By the same token, if we have a safe planting and a quick planting and producers sell cash, those spreads could start to get really wobbly on us as far as the July corn and beans falling to the back into the area of the November, and they keep the November beans and the December corn premium. This is where that South American crop comes in. So that's kind of the logic that I have right now as far as how to watch these spreads, the planting, South America, and the old crop corn and beans farmers are sitting on.
Mike, let's flip over to livestock and talk about that a little bit. We don't want to lose livestock in the shuffle here today. Feeder cattle were down, which was expected with that huge surge in corn prices. Live cattle, the fats rallied moderately today, and it seemed like overall wasn't as bad a day in cattle as it could have been with that
Yeah.
huge jump in corn prices.
Yeah, no, I agree with you. I think I'm real worried about the feeder corn spread though for right now, and the feeders getting their feed needs locked in. I wrote this weekend I wanted to get down to around 435 on December corn. Felt like that was a great place to get long-term needs covered. I think we got down to 446 or 444 on the low in December corn before the report, and I just wanted to wait to see what the number said. But I'm gonna have to make some tough decisions here with the idea that how much likelihood can we get back to $4 corn or 4.25 D's futures in the next 90, 100 days? and I may just have to get some feed needs purchased here. So I'll be looking at that real hard right after the Easter holiday. I think the cattle market felt very supported by the hog market and by the stock market. We have another surge in the equities markets, Jesse, and I think that's really helping the cattle at this point, because the market, I think, is buying into the idea you and I've talked about, that the retail business is coming back. I've been slow on this retail business coming back because of some of the issues with COVID and some of the issues with the cash cattle price. But I will say that some of the big grocery stores this week finally met what I needed and met my needs, and I got what I wanted from a standpoint of one in particular, very large chain came in with a $1.99 boneless ham price and a $5.47 or a $5.67 a pound standing rib roast price that was choice grade. And so and they were on the same page. So I think we finally gotten to the level now between the supplies of cattle and the weights going down, and the fact that I think they're going to start really taking on some retail business and gain back some of their lost market share from pork. I think the cattle are poised for some stability. I will sell rallies in the back end, though, in case things get bad when it comes to the corn rally, or if we have another issue with the COVID that spreads from Europe or something like that. I still want to hedge, but I'm going to be more selective on hedging cattle. Hogs, I still feel like they have upside as long as the April has the lead month contract. But after that, I think they're going to lose some of their horsepower.
Yeah, well, and on the hog side, we did close up some of those price gaps on Monday, it looked like. So that was hopefully a supportive note there for that hog market as well, Mike.
Yeah, WH Group came out with something that fed the bull this week. I mean, that needs to be talked about because it was a big deal in a way. They admitted that the vaccine for African swine fever being used in China that has not been approved is doing more harm than good, and their kill levels were 40% off in China from what they were a year ago. And they had to try and make that up with the United States and Smithfield shipping, I think it was 700,000 metric tons of pork over into China in the period that they were talking about. And so that was very insightful news that we do not only have a disease issue here in this country with PRRS still that's impacting us supply wise. I think it's getting better from what my producers are telling me. But it's still lingering in terms of what we have in terms of market ready pigs. Sow prices are still elevated. So for right now, the cash market supports and the futures market supported by the cash. But as I said, when we get in that May time period, it may be a little bit rougher going.
Mike, any final thoughts for our producers today before we run out of time?
Well, the big thing is I'll circle back around after the acreage and stocks report gets us really excited, and we broke our Wednesday curse, as you said. Remember earlier this week, the dollar was rallying, the emerging markets were going down, the outside markets were pressuring this corn and bean market, led by the wheat market. This is where the macro side is a definite headwind right now. I'll be the first to admit when it is not a headwind, but for right now, it's a very strong headwind. So keep that side of the ledger and the balance sheet in your mindset. Don't just think all supply demand.
Well, Mike, I know folks can reach out to you if they need a little advice. You got all the great stuff in your newsletter and more. GlobalCommResearch.com. That's GlobalComm with two M's, GlobalCommResearch.com. And that's where folks can sign up for a trial, can't they?
Absolutely. Absolutely free. And I won't bother you more than once after the trial ends. So hope you go there and sign up.
Mike, appreciate the time as always. Have a great rest of your Wednesday. We'll talk to you next week.
And a happy, blessed Easter to you, Jesse, and also all your listeners out there and viewers.
And thank you very much for that as well, Mike. You as well. Mike Zuzolo with Global Commodity Analytics joining us today here on Market Talk for this Wednesday, March 31st. I'm Jesse Allen. Have a great afternoon.